Okay, the day has finally come. It is Thursday, September 18th, and the Fed has finally announced the rate cut. So if you didn't know before, basically, the Fed yesterday announced a 0.25% rate cut. Now that does not mean necessarily that mortgage rates go down exactly by 0.25, but that's about the rate that banks and institutions trade money at. So that will have an impact on the overall mortgage rate. So let's talk about where mortgage rates are today, specifically after that. Now, keep in mind that sometimes mortgage rates will come down preemptively before the Fed cuts the rate. So that may have already happened. The mortgage rate today for a 30-year fixed is at 6.37%. So that's actually up slightly from where it was a couple days ago. So this can be a little bit volatile after that initial announcement by the Fed. The 30-year FHA is at 6.05% and the 30-year VA is at 6.07%. So FHA and VA have gone up as well from where they were last week. So this is really important to think about because once the Fed makes that rate cut, it's important to see that that actually impacts the volatility of the market a little bit. The reason they're making the cut is because they see slowing job growth in the US, and so they're trying to help that and help tamper inflation. So it's something that they're doing to make the economy better or make money a little bit more affordable so that businesses invest and can put more money towards expansion or potentially hiring new people. And so it's normal that this rate might go up and down a little bit after that announcement. And like I said, that cut is typically priced into what we see before we actually see it. So that is something where when we saw the rates start to come down last week and the week before, this is preemptive about people expecting the Fed to cut the rate, and then they did. And so that's why we're at this point today. Now, let's talk a little bit about what is going on in the housing market, specifically in Seattle. So for condos, for new listings, those were down 16 this week at 233. For pending condos, we saw that up 28 this week at 191. And then for sold listings, that was up 12 this week at 112. For residential single-family homes and condos, we saw that new listings were actually down by 82 at 577 this week. Pending listings were up 82 by 613, coincidence. And then sold listings were up by 22 at 355 this week. So keep in mind, the market is still moving. We are seeing things sell. They were not selling as aggressively as at the very beginning of the year, January, February, but we are still seeing things sell. And it's important to note that actually the number of new listings coming down is a little bit rare for this time of year. We may see that change with the new interest rates and people thinking, oh, this might be a good time to actually capture a buyer who is looking to take advantage of that new interest rate. But for now, I would expect typically that we'd actually see the number of new listings in residential to go up. Right now it's going down a little bit, but we do see the number of homes going under contract is strong at 613, and that exceeds the number of new listings this week. So for buyers, now is a really good time to get a lower interest rate, which is great news for you. And you can even use some negotiation power to buy down that rate. And for sellers, if you are trying to capture those buyers right now, make sure that the price is really good, really spot on for what you're selling. And then also make sure that your marketing is spectacular, that the home looks compelling, and you could capture a buyer with these lower interest rates. There is talk about potentially 2 more rate cuts later this year. That could bring the rate down even further. It's not a guarantee, but it could bring it down further. So as always, we'll keep you updated on that. Thanks again for tuning in, and let me know if you have any questions. If you want to start your buying or selling journey, reach out and let's schedule a free strategy call so we can talk about what you're looking for and what you need, and then we'll start from there. Thanks for tuning in. See you again next week.